Monday, March 2nd, 2020, MONERO 64, home of alternative economics and contrarian views. So, not surprisingly, the central bankers are out promising help and support, promising to bring out the bazooka of monetary policy to revive the financial markets, despite the fact that we have a crisis on our hands that has probably never been seen before. We also have the most debt leverage in the financial system, in the economy that we've ever seen before. I personally think this is a crisis of faith and confidence. And faith and confidence is the most important asset that a fiat currency debt-based or credit-based system has. And with what's going on now, the crisis spreading all over the world, I don't have to talk about it. You all probably know from watching other channels, and I won't cover it too much. And I have covered it a bit in the past, and you can look at my videos, how I think it's going to impact travel, tourism, the global supply chain. I think central bankers are deluded to think that they can save the day. I think consumer sentiment, consumer psychology is going to be changed in ways that we couldn't fathom maybe a month or so ago. And that's why I think, yes, they could help the stock market rebound a little bit today. They might even be able to get the stock market to make all-time highs. But all that will do is that's going to create even more loss of confidence in the currency that they print, that they create out of thin air to keep the stock market up, to keep paper assets up, to keep the debt bubble from imploding. But eventually, of course, the more faith and confidence people lose in the currency, that means the quicker they get rid of it, and that's the definition of hyperinflation. People will want to have anything but that currency. And we saw that in Weimar, Germany. We've seen that in Venezuela a few years ago when the Caracas Stock Exchange Index made an all-time high, but their local currency was kind of worthless. So what's happened overnight? Well, the markets opened under pressure last night at 11 p.m. London or 6 p.m. New York. I think the Dow was down as much as 500, another 500 points. We got down to 24,860. And then we had an announcement from the Uber accommodative, the Uber hyperinflationary Bank of Japan. And you might think, how can Japan be hyperinflationary? Well, it is. You just have to look at the price of gold in Japanese yen. Recently, we made like a 40-year high at 180,000 XAU JPY. So this is what's happened overnight. BOJ spurs Asia markets rebound with vow to fight the C disease, right? To me, this action that central bankers will probably take is synonymous to central bankers being at the forefront of the defense of the planet against extraterrestrial invaders. It's going to make no difference throwing money at extraterrestrials or at this crisis. I think they're deluded. But again, it's the only thing they know how to do. And they think they will help. I think they won't help. It will be even worse. And that's why you need to keep a hold of your precious metals, of your gold and silver. Of course, gold and silver won't save you from being healthy, but it will certainly help you try to do that, in my opinion. So what does the FT say then? Let's have a look at the article. And there's another article on Zero Hedge about Goldman Sachs as well, saying that there's going to be concerted action. So it says the prospect of a rolling monetary stimulus around the world spurred a rebound in financial markets on Monday after the Bank of Japan followed the U.S. Federal Reserve with a vow to fight the C disease. In an emergency statement, as markets opened on Monday morning, BOJ Governor Haruhiko Kuroda promised to inject liquidity into markets and hinted at raising asset purchases, indicating the central bank is moving into crisis mode. So they're probably going to be buying stock market ETFs as well, equities. The Bank of Japan, they've been known to do that. So what about Goldman Sachs? Well, Goldman Sachs has come out said, and on Zero Hedge it says Goldman now sees 2 rate cuts in the next 2 weeks, expects coordinated central bank easing. Here's their updated forecasts. That's the funny thing about Goldman. They come out with these forecasts, but they change it almost every day. So here we go. U.S. Current rate 158. That's the effective Fed funds rate. So Goldman sees the Fed cutting rates by 50 basis points now. They see them cutting twice in the next couple of weeks. Their meeting, of course, is March 19th, March 20th. But they see them cutting before even, I think. They see the UK cutting rates by 50 basis points by the end of March. They see Canada cutting rates, Australia, New Zealand, Norway. Of course, the Euro area and Japan don't have much room, but they could still cut further into negative territory. Could they announce QE? Definitely as well. Could this be the excuse for central banks like the Fed and the Bank of England to start buying stocks? Definitely. Definitely they could use this as an excuse. So where are the markets this morning? Well, it's just past 8 a.m. London. The Dow is up 410 points, the Dow futures. So that's up just under 1.6%. Don't forget, last week the Dow dropped 9% and it dropped to 12% year to date. So that's what we're looking at right now. So this is a good rebound. I mean, 400 points is not bad, but and it could go higher, of course, before the U.S. comes in, and we could have more announcements in the interim by the ECB, by other central banks, and even by the Fed. Maybe the Bank of Japan was just the beginning. They started out earlier, of course, because of the time difference. So we got the S&P up 1.25%, just above 3,000, 3,003. Prior to the BOJ announcement, the S&P got down as far as 2891. What about precious metals? Well, they have rebounded with the stock market. Right now, spot gold is at 1,601, up $15, just under 1%. The high has been 1606.91. And the low last night was 1575. In terms of technicals, I would say 1610. If we can break back above that, it would be very positive. So we got close to that level. I'll just show you a chart of gold, a weekly chart of gold. And you can see here, yes, it was a big drop on Friday, but the weekly trend still seems higher. We're making higher highs and higher lows. So who knows? Am I saying we're going to go straight back up? No, but it doesn't look that bad. It felt bad on Friday, but the market still remains fairly solid. Silver. Silver's up almost 2%, 1.75 at 16.95. We did get up to 17.08. Silver's always very volatile. The low was 16.42. What about the currencies? There's a lot of debate about how strong the dollar is or how weak the dollar is. And I mean, last week, at the end of the week, the dollar was very weak against the yen. The dollar was very strong against the stock market. Yes, the dollar rallied against precious metals on Friday. But I would say all these fiat currencies, they're going to keep losing value versus gold and silver. Yeah, they might gain value versus other assets, but they're still not something safe to hold. They're debt instruments. And right now, with the cost of living still rising quite sharply, and I would expect the cost of living to keep rising, for prices to keep going up. And don't believe central bankers telling you that we're going to get very low inflation. I don't think we are. It's going to get even higher because the supply chain is going to be affected. There's going to be less supply of goods out there. There's going to be people hoarding as well. So with interest rates where they are, the US yield curve like almost below 1% all across the curve right now, it's not a great place to be, fiat currency, and it hasn't been for many years. So that's my view here. So how's the dollar doing against the other sinking fiat currencies? Well, the pound is down 0.2% at 127.92. The euro is really strong this morning. It's up 0.5% versus the dollar, almost at 111. So come on, euro. The dollar is stronger against the yen, not surprisingly, after the BOJ announcement or statements this morning. It's up 0.25%. And the dollar is down 0.25% against the yuan, 695.80. Crude oil, not surprisingly, has rebounded. It got down as low as 43.56 WTI overnight, and now is at 46.65, up 4%, almost $2. Oil will be the same strategy, in my opinion. Sell the rallies, just like the stock market. Let's finish off looking at the bond market. As I said before, U.S. Treasuries trade all around the world, not just in the U.S. So right now, the 10-year yield is up 10 basis points from the lows. It's at 113.5, but still well below the previous record low of around 132 that was reached back in the summer of 2016. And I think right after World War II as well, in 1946, the 10-year yield got down to around 140. The Federal Reserve did do QE during World War II to keep interest rates low. So that's how historic this move in yields are. The bond markets are good predictors of economic activity going forward. So yes, to conclude, the central bankers, they could keep things elevated. They could throw their funny money at the markets, but I don't think they will succeed in changing consumer sentiment. I think it's too far gone, the psychology, because of the crisis. And all it will do is exacerbate the crisis going forward, the loss of confidence in their fiat currency. And that's why you need to hold on for dear life, as I've said before, to your precious metals. And of course, look after yourself. I would have to say that I'm in a fortunate situation that I can do my videos from home. I don't have to travel by public transport anymore to the city of London every day, be around a lot of people. If you enjoyed this video, make sure you hit the like button. Think about subscribing to the channel if you haven't yet. Please share this video far and wide. And you can also follow me on Twitter, Facebook, BitChute, Steemit, and DTube. I wish you all a great day. Take care. Bye.